Hey guys, Mike here. So I hope everybody's having a great weekend, and we're gonna dig into February because this is a very interesting month for the market, and we'll look at a few charts and stuff, and I'll dig even deeper in just a real quick glimpse and over the last 10 Februarys and let you see for yourself what you can expect in February. And also we'll get into some charts because a lot of companies report earnings this week. None of these will shift the market, of course, because these aren't like the big mega caps from last week. Their percentages are very low as far as what they make up on the indexes and stuff. But some are setting up some very interesting moves. Also, I just want to say thanks for all the feedback about Yellowstone. You guys gave me so much feedback and so many emails. I actually created a Word document, which is 3 pages long now. And so greatly appreciate it. Definitely got to check out Glacier National Park. That seems to be a highlight from all you guys and a very big recommendation. So we'll certainly do that as well. And I'll let you guys know how it all works out with the planning and stuff. So I do appreciate all the feedback. Great community. And I did want to start off with this because this is hilarious to me. You know, we always talk about this crazy wealth gap, right, in this country, and these insane amount like of wealth just a certain few have, right? And I don't know if you saw the other day where Mark Zuckerberg, his wealth increased by 29 billion in basically a 12-hour span, right? And actually, it's less than that because when the stuff shot up at 4:30, you know, you want to wait the next day to see what it opens at and what it holds at. But $29 billion increase in his net worth right there. And you got to think about this. I mean, the man was already worth, I think, like 130 billion coming into that. But my friend and I were talking about it, and you know, it's kind of an interesting game to play or scenario. But do you realize how ludicrous that is for one person to be increasing their net worth by 29 billion overnight? When if you took your whole family tree from the beginning of time till now, I almost bet money all y'all to get combined, that's what, hundreds, if not thousands of people since the beginning. And you can count both sides of your family tree, obviously, when you're putting it together. So it's a lot of people, right? Aren't worth even what he increased himself with in 24 hours. Not let alone, I mean, he's worth like 170 billion now. Think about that. Billion, one person. Okay. But that's just nuts. I mean, I know my family tree, there's no way we're worth probably even a billion or 2 billion, but you know, if that, not 29 billion. So it's crazy to see that right there. Ugh. And I go on a tangent about that for like an hour to let you understand why that is an enormous problem, but I will not. Maybe in a Saturday video if you want me to do that. But looking at the seasonality and for February, and you can see this right here. I'll show you a couple of charts, and we'll dive deep into the actual chart. But you know, it's really a crapshoot. I mean, it's the third worst month of S&P as far as performance. This goes back to 1994. You can see back from 94 to 08, it was actually pretty bad. It got better after 2010, right when the Fed took over. Also, usually in historical standards, the first part's better than the second half. But is that really true now, right? And so just going back in the last 10 years, you can see, I'll go back from 2023 back. You can see nice red year there. We go into 2022 here, nice red year there. That was a really bad February right there. But then, of course, we go into 2021, end up with a green February. It's not great, but hey, it's green, right? So we'll take it. Obviously, another red one right there. So you 3 reds, 1 green. Then the next one you can see right here, which I believe is 2019, you know, end up with a green year right there. We end up going over to 2018, end up with a red year on that one. And then you can see right here, going back, you get just a bunch of green ones, right? We got a green one right here. One before that, which is in 2016, end up basically flat, but slightly green right there. Then we go over to 2015. Definitely a green one. There's a really nice one, 6% right there. And then the last one right here, which will put us at 10 years, 2014 right here. Started off bad, but boom, rev right up. You know, really nice. February. So as you can see, and the reason why this is important to understand, and guys, before we continue, if you hit that thumbs up, I'd certainly appreciate it. It helps people find the video. And if you like the content, think about subscribing. It's because it shows when you just look at a graph, it tells you half the story, right? So when you look at that, there was actually more green than there was red, but it's really 50-50. I mean, I don't think it was 60-40 there, but it's a crapshoot what's going to happen, right? And of course, where are we at right now? We're setting at all-time highs. And so that's a big difference when you look at, if you notice in 14, 15, 16, we were definitely not like at all-time highs. We were still actually recovering coming out of 08, still ramping up. The Fed had taken over. That was the start of like the second greatest bull market ever. And so, and then when you started looking at 2023 and 22 and 21 and 20, you know, that was like, that was a lot different, right? And so you can have some ugly ones for sure. And seasonality, actually, the ones I look at says you go up and then you drop off, right? And so again, this melt up is continuous. I think it really depends on where you're at. And so setting all-time highs, it's going to make it very interesting. That is for sure. Now you can see S&P right here. Still in this channel. Actually broke out of this channel on Friday and then sold back down into the really right at the top of the channel. So we'll get to see, if we get a little sell-off here coming up and everything. Again, it's short of the 5,000 mark. That's what everybody keeps saying. It's going to be 5,000, 5,000. Don't mean you got to get there or anything. And so again, this is going to be a light economics data week. So I'll show you. And then the earnings, there's no earnings that are going to shift markets or anything. It's just a boatload of them reporting, and a lot of it will be on guidance. But obviously, we'll see if we stay in that channel. And when you look over here and we pull it up, you can see, we're about 0.85 maybe percent away from 5,000. And so those big round numbers are the ones you want to watch, right? Because the next thing you look for is liquidity. Okay, what's going to be the next liquidity grab? Should be down soon. We'll have to see, of course. Now, when you look at Tesla, one thing that's interesting about these pullbacks is, like the last two you saw there, around 30%. It really likes that 30% mark, somewhere between like 29, 31%, and now we're sitting at 30.5%, I believe. You look at the ones before that, around 30.57. The biggest one was this one right here, and that was just the total crash right there. That was the bad one, went at 103. But if you look at these right here, I mean, that's about 44%. The other one right here, you can see the pull down from here to here was right around 30% right there, 28 right there, and then it pops back up, big move back up, and then we end up moving back down. That's around 40%. So, mostly 30, 31%. You do a couple 40s, and now we're sitting at 31%, right? And so around that golden pocket fib retracement, we've had the 3 to 5 days to look at where it's going. So don't be surprised if you get a move up or anything. We still haven't touched down that trend line right there. But again, 40% would put around that 160 area if it did go down that far. So it kind of gives you an idea of why you see retail that they're buying it up for sure. But again, past behavior does sometimes predict future behavior. Actually, a lot of times it does. What's amazing though when you pull up the RSI is the fact we're still oversold on the daily, right? MACDs looks like it wants to get a bullish cross right there. It's kind of trying to turn up. So if that happens, you might definitely have a recovery. Again, just watch the call sweeps. That's going to be the big ones. And, not saying it's going to be a 30 or 40% recovery on this one. But, when it's Tesla, you just don't know. Remember, the most traded stock in the world. So keep that in mind. Apple is the most bought. Tesla is the most traded still. Maybe NVIDIA will overtake it at some point in time. We'll have to see. Now, looking over here at Disney. I ain't talked about this in a minute, but his earnings this week. And this one right here is definitely aiming for 100. It's been on a pretty decent move here. As you can see, just consolidating right there. And that's kind of what it did the last 3 times it moved up. Just consolidated, moved up, consolidated, moved up. It's in that gap right there from the earnings gaps all the way back to, what was that, May? And so it's not far from 100 at this point in time, sitting at 97. And so, again, a lot of this will probably depend on earnings, but we'll see. They do have the streaming network and all this other good stuff going on for them. And streaming networks seem to be doing pretty good right now. So we'll see if they finally get this one up to triple digits. It's been a while. As you can see, that chart is just horrendous. And, I mean, they just sold off a lot. And if we pull up, your MACD, your RSI, just kind of looking at it, they look good. They're not overbought at all, right? Still got momentum moving up above the 0 line on the MACD. Doesn't really show too many signs of trying to roll over. So, but again, I think they report Wednesday, if I'm not mistaken. We'll see at the end. That's what this will depend on. And maybe it'll pull a Netflix and gap on up and finally get to triple digits. And then there's PayPal, who's reporting earnings this week. And you can see it's trapped between the 50 and the 200 after that crazy manipulation move where it shot it up 3 huge green candles and then 3 huge red candles on the way down before that nice little event they had. That was fun times, right, with the huge volume. And so, again, this is going to be another one. A lot of people think it's fintech. Obviously, SoFi had a good report, right? Ran up, gave up all its numbers. But if this can break above that 200, finally get back on that gap, they report on Wednesday, you could finally maybe see 72. That's what everybody's been waiting on forever and a day. Then you got Palantir, trapped below this one. This one's basically just been going sideways, right? But it's setting below the 100 moving average, setting below the 50, below the trend line. Up above is that area we talked about right there. There's a lot of volume up in there. You got that daily fair value gap. It got up and got rejected once. That's the little shaded area up there as well. And so, a lot of people expecting good earnings again, right? And so that's what happened last time. It gapped up, went up, and then sold off completely. But if it does, it can gap above all of that resistance, right? Just like you saw, I think it was Amazon did the same thing. So, but again, if this one breaks below the 200, it's definitely going to finally close that RTH gap down to 15. Might even be going down to like 13.91, which would be good support for it. But again, earnings will pretty much dictate where this one's going, because these are high flyers, right? Especially Palantir usually will move pretty big either way. Pinterest is another one, moves really big on earnings, anywhere from 12 to 20%. And it's up 58% since its last earnings, right? All the moving averages starting to point up and everything. When you pull out on this one, if it does report really good earnings, say it pulls a Meta, just because of the way it ramped up and crashed down, there's not a whole lot of resistance you can see from the volume profile. You got, a little bit coming here or there, but you got nice support right there below right there. If it does have bad earnings, I mean, it's going to break through that and close that gap down to probably like around $26 probably. But if it ends up having really good earnings and spiking up, this one could go anywhere from $40 to $50 pretty easily. I don't think it's going to be a big stretch to even see that happening. I mean, that's not even, 12%? So up to 50s, around 28%. So, just pay close attention. That one's going to be a big move in earnings, I think, honestly. Now, when you look at the RSI on this one was doing a lot of stocks are doing, guys. It's making these higher highs in the charts, and the RSI is showing a different story. Of course, the S&P has been doing this for quite a while. So it doesn't mean it's got to play out. When you look back at the other earnings, I didn't really see anything. I don't see any kind of divergence that would have played out on this at all. And so, again, we'll see if this is telling us a story like, hey, this has been going high. And what's funny about this is when you pull up Pinterest over the last probably since November and pull up Meta, the charts almost look identical except for this last earnings call. So it's basically just been following another social media company up. Sometimes they link up like that, kind of like your fintech stocks. Now, BABA, this one's actually had something pretty interesting going on. Obviously, it's just sitting there. I mean, it's still an ugly chart beyond belief. But, you are seeing a little bit of bullish divergence right there on the RSI. You can see the MACD's trying to get above that 0, which is really what you need. But more importantly, it's not just retail now actually trying to bottom fish BABA. It's actually institutional, right? We're going to FinTel. You can see right here, last couple months, they're actually starting to buy in, right? Now that means a whole lot of nothing, because you can see over there in June, man, a whole lot of institutional ownership started coming in, and the stock still has been crashing and burning. So again, though, we'll see if that continues. That's what you need to try to really push this up, because retail's already been dipped buying this one, but now to see institutional stuff moving, again, they report earnings too, as we can see right here. We'll go over these. You can have just a boatload of earnings. I mean, Caterpillar, McDonald's, on Semi right there. Palantir is going to be on Monday, so first thing, we'll know very quickly what's going to happen, right? Lilly, which has been on a tear, Spotify, BP, Toyota. Tuesday also, Snap's another one, Enphase, Ford, Chipotle, Elf, Fortinet, Amgen. Woof, got to get my breath. Wednesday, you're going to have Alibaba, Uber, CBS, Roblox. PayPal is going to be in the afternoon with the Walt Disney. Wynn Resorts, we'll see how they're doing. I'm sure we're still gambling. Thursday, you're going to have ConocoPhillips, Camco, Hershey's going to be another one to watch out for. And then in the afternoon, you'll have a firm. It's going to be a high flyer either way it goes. Pinterest, Cloudflare right there, Expedia. Are we still traveling? And then when you look over here on Friday, you'll have PepsiCo, which is just a huge company in itself, and one other to really pay attention to. But when it comes to economic data, it's actually going to be a light week, right? We'll have some, ISM services data coming out, S&P Global Services data coming out on Monday. Tuesday will be a red book day, but really nothing else going on. I hope a 3-year note auction isn't going to be a problem. You have a lot of Fed speakers this week, so pay attention to that. If you see some crazy shifts in the market, maybe something they said or something. Wednesday, as you can see, a lot of oil data, but really, 10-year note auction, that's really the highlight of the day. We'll see how that goes. Watch the yields on that day. Thursday, initial jobless claims, continuous jobless claims. 30-year bond auction, that will be interesting on 1 o'clock. And so we're going to have some pretty big bond auctions this week. As you can see, the data is extremely light compared to last week. It was heavy. What happened? Still went up last week, right? And so the market continues to melt up. It pulls down. You've seen these crazy swings in the daytime to pull liquidity, fill the orders, start ramping up again, right? And so we're going to get to see this week. And when you're sitting at these all-time highs, that's what's going to happen. It's going to move up, and then it's going to try to find some kind of demand level below where people are willing to have those orders filled to move back up. That's just the way it's going to be until we'll see if we finally get a pullback, right, of a significant kind. 5 5 to 10% somewhere in there at some point in time. It's going to happen. You pretty much set your clock by it. It's going to happen. It's just a question of when is it finally going to happen? Is it going to be during earnings seasons or after earnings season? Because we're in that vulnerable period between February and March where you usually see that in the first quarter at some point in time. So let's wait and see if we see it. We'll look for cracks in the old dam and all that good stuff. So anyway, hope you guys got something out of it. Hit that like and subscribe button. Feel free to let me in the comments know how you think some of these earnings going to go between Palantir and Baba and all the others. So I always like reading those and stuff. So anyway, hope you have a good one, and I will see you tomorrow.